Hey everyone, Couch Investor back to another video for today. So let's talk about Sea Limited. We're going to go over their recent earnings report. Obviously, some of those numbers were a bit weak. Guidance especially for Garena, was a bit weak, but the growth is still there. Now, I do understand those that hold some shares and don't want to add any more right now until they see further improvement in the numbers. But to me, it's not really a reason to sell any shares. One bad quarter doesn't really mean much. The stock already is down 65% since all-time highs. The last couple of days have been red as well. Maybe if you are new here, maybe you want to pick some shares up right now, because right now the price is obviously much cheaper. Valuations is cheaper as well. But then again, maybe you want to exercise some patience until next quarter and see what happens. There's also some other news I want to touch on. And the first one is Sea Shopee's exit France after a few months into Europe. Now we all know that Sea Limited and Shopee, this is basically the same company, but Shopee is their e-commerce side of the business. So it says here that the site will close on March 6th. Now, a couple of months ago, they started a pilot program to go into France and some other European countries as well. I think Poland was another one, maybe Spain as well. They're going to close because apparently it didn't work well, and it's great. You don't want to continue and force some side of the business that isn't really performing well. It will just cost more money, and that's probably something that most Sea Limited holders already know. It's a cash burning site, and if one site, the e-commerce site, is burning unnecessary cash, that's not good at all. Second of all is the India ban. So a couple of weeks ago we had news that India is banning a lot of companies, games, and basic servers, data servers that are located in China. Sea Limited is not a Chinese company. If you didn't know, Sea Limited is a company from Singapore. But there's still hope that this ban might be overturned. So the Singapore's Ministry of Trade and Industry said on Wednesday it hoped India's ban on popular gaming app Free Fire, owned by Sea Limited, could be resolved quickly. Singapore had raised concerns with India after it blocked Free Fire as part of a crackdown on 54 apps it believed were sending user data to servers in China. It is a big deal because India is the top market for both Free Fire and one of its premium versions, Free Fire Max, by number of downloads, according to data analytics firm Sensor Tower. But India made up just 2.6% of Sea's mobile game net sales in 2021. Now, if this continues and the ban remains, it will probably be very, very negative for that side of the business, for Sea Limited, because that side of business is used to, let's say, sponsor the other segment. If that side of the business is slowing down and maybe will become not profitable, that might hurt the business in the long term. But again, like I said at the start, it's something that you need to monitor in the coming quarters. Now, before we jump into the numbers, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Alright, so first up, just want to mention that they did miss on earnings per share, but they beat on revenue. So it's basically a bit neutral. So first up, a big overview here. So that's triple digit growth in GAAP revenue, still very, very high growth company. 106% growth year over year to $3.22 billion. And as for the full year, also triple digit growth, 128% to $9.95 billion. All right, and now as for the different segment, as you can see here, this side, this is the digital entertainment side. It only grew 7% year over year. And if you look at this, it's down quarter over quarter. So monitor this side because this is going to be extremely crucial in the coming quarters. As for the e-commerce side, that's up 89% year over year, and it's up also quarter over quarter. Obviously not such a huge jump as we've seen before, but at least we see here it's not slowing down. And as for the Sea Money side of the business, that grew 711% year over year, obviously the fastest growing segment of that business, but still relatively small compared to the others. So Garena, the digital entertainment side of the business, quarterly active users grew 7% year over year. They are losing users, as you can see right here. Quarterly paying users are up year over year as well, but quarter over quarter, it's losing a lot of users. And remember, this is a quarter before the India ban. Now, as for the e-commerce side of the business, they're extending their leading position. So gross orders are up 90% year over year. Quarter over quarter, it grew quite nicely as well. We are going to talk about Mercado Libre in another video. GMV grew 53% year over year and quarter over quarter as well, going up. And as for C-Money, quarterly active users grew 90% year over year. Total payment volume for mobile wallet grew 70%, and quarter over quarter, you can see here the stairs on the way up. Just very, very nice. Now, as for total gross profit, obviously 2021 was an amazing year for the company, for most big e-commerce and gaming companies out there. Growth here, 189% year over year. And then to compare the fourth quarter in 2020 to 2021, again, massive growth here, 146% growth year over year. Very, very impressive. And this basically shows what I meant before. You can see the dark blue is the digital entertainment side. That side is profitable. Now, if that starts to slow down and decrease, there's probably going to be a problem here because they do use that side to support the other ones. And this is obviously not a profitable business yet. For the fourth quarter, they lost more in 2021 than in 2020. And then for the full year, the same thing happens here. But as for cash equivalents and short-term investment, you can see here quite nice growth year over year. Just 4 years ago, they had $1 billion. Right now, that's 10 times bigger. So I hope you understand what I meant at the start of this video. The business itself really doesn't show you any reason to sell your position, but maybe it gives you some reasons to wait until you want to add. Now let's have a look at full year guidance. So digital entertainment and bookings is expected to come in between $2.9 and $3.1 billion, representing only 32% growth year over year. That was also one of the talking points when they reported earnings. E-commerce GAAP revenue to come in between $8.9 and $9.1 billion, representing 75.7% year over year growth at the midpoint. Still very, very nice, but that we know already that those two segments here, the e-commerce and the digital financial services one, are the ones that are growing extremely fast, but also not profitable. So we're going to see what happens in the short term. As for C-Money, they expect it to come between $1.1 and $1.3 billion, representing 155.4% year over year growth at the midpoint. But in their letter, they do talk a bit more about the Garena side of the business. So they say here, with many companies reopening further in the fourth quarter and into this year, we have absorbed some moderation in online activities and fluctuations in users' engagement. Moreover, due to the unanticipated government actions, Free Fire is currently unavailable in the Google Play and iOS App Store in India. The guidance takes into consideration these headwind factors. The midpoint of the guidance of $3 billion reflect our current expectations that our bookings for 2022 will be close to the level in 2020, while also considering the uncertainty in India. So there could actually be two possible scenarios this year that might happen with C-Limited. One, the ban does not get overturned and it hits the business in the coming quarters, and that reflects in their future earnings, which is obviously bad. Second is a positive thing. The ban gets overturned, users flock back to the app, that side of the business continues to grow and perform, still remains profitable, and they use that to invest in the other segments, and we've seen the other segments are still growing extremely fast. So those to me are the two scenarios. Obviously, it's in my second portfolio. It will be in the channel's portfolio as well. You can follow that on stockcard.io. But overall, these are my thoughts. Do share your thoughts down in the comments below. And if you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.